Good day, fellow investors. Ford stock is down, but is it a buy now? Let's analyze. We have a situation with a dividend yield of 6.5%, which is a very nice dividend yield. But if you look at Ford stock over the last few decades, the capital gains are zero, thus only the dividend is what you can expect as a long-term investor. But again, it is not a bad dividend. However, when it comes to Ford, there are three investment lessons that we also need to understand. It's an industry without a competitive advantage, and that then results in just dividends and hopefully inflation that we don't see here yet. It is very cyclical, and the investing returns will be, let's say, just average. And you have the cycles that if you learn how to get on those cycles, you can make really good returns, but that is something that you have to know and understand what you're doing. When we look at the earnings, the recent full year earnings, the company is focused on growing, better margins, but those margins depend on the competition. And if a company like Ford invents something new, others will copy it next year. So that is something that is always a way on these companies. If we look at highlights, they are growing, however, profitability is hit by the electrical vehicles. But if you look at things, good cash flows, earnings a little bit down, but the key negative here is electrical vehicles, where they're losing $5 billion a year on that. Ford Blue looks good, $100 billion in revenue, EBIT margins 5%, so okay. Here it's absolute destruction, $4 billion in revenue, $5 billion losses, as the electrical vehicle boom went into a bust. Pro, again, stable with even higher EBIT margins for the company. Ford Credit auction values for the confiscated, not paid leverage is down a little bit, which is always a risk of a severe recession when you cannot sell trucks into a recession, and then that is another risk for such companies. But the guidance there, EBIT lower, cash flows also lower significantly, capital spending stable still, so they keep on investing just to keep their market position. They will keep losing on that electrical vehicle. And if you look at the market cap and the cash flows projected for next year, that's a 10% free cash flow, but that's always adjusted. So the reality is that if they cover the dividend, they are happy. And this is exactly what you see also reflected in the stock price. When things look good for a year, electric vehicles booming, investments, the market is exuberant. And when things look bad for a few years, the market loses patience and really sells that stock. Here it was close to bankruptcy, like in the early 80s, recession, boom, recession, boom. That is the situation here. And keep in mind that this stock price now is with a tailwind, which is that we have not had a proper economic recession in the US for 15 and more years, 12, 13 years in Europe, and Asia also no recession. So if there is a recession, this is something from Martin B. Zimmerman, a former CFO of Ford Motor Company, that I found in a speech spoken before the financial crisis. And you can see here that in a business cycle, average sales for Ford 15 million, a severe recession per year is 13 million sales, and that drop, just a little over 15%, is really the difference between decent performance and severe losses, with a lot of job reallocation and job destruction. That is how Ford is cyclical, and that cyclicality has to be understood, where the key risk is a big recession. And if there is a recession, then everything looks even uglier than now. If we look at where we are now with 10% free cash flow, I would say we are at mid-cycle. And to invest in a cyclical, I always urge you to look at Peter Lynch, this video, how to buy what kind of stock, link in the description below. And he says how it's easier to predict an upturn than a downturn in the industry. So we are still in a downturn, timing is everything, and it's not about holding, because holding leads not too much, is about understanding the businesses, and you have to wait for years before seeing another upswing. Ford investors waited, was made in 2019, I think. They waited, and then in 2021 the big upswing came. And something very interesting here, large and well-known companies that make the unwary stock picker most easily part with his money. Large and well-known companies like Ford. Can we predict now a cycle? I said we are at mid cycles now, so you have to see how this might fit your portfolio. Look, industry sales at 16 to 16.5 million, the same as 20 years ago in that presentation. Lower industry pricing, more competition, they will try to reduce costs, but that is a negative outlook. Now, is Ford a stock to buy now? As with any other stocks, it depends on you. Because if we look at analysts, when they say hold, that's sell. And when they say buy, that's hold, and strong buy, that is buy. So for Wall Street, Ford is a clear sell. And if we look at price targets, the average is close to where we are now, and there are some still with high targets. But if you look at the targets, when Ford stock was at the highest in 2022, the target even went to 22. So you can see how these analysts constantly change the targets in relation to what the stock is doing. This is pure stupidity, because when their targets are ugly, then it's the best time to buy, and when their targets are exuberant, it's the best time to sell. Now, it's impossible to know whether Ford is a buy now, because we are still in mid-cycle. Recession next year, it will go down another 50%, the recession, bailouts, who knows. But we can ask ChatGPT, what is the probability of bankruptcy in the next decade? 80% Ford adapts and thrives, thus 6-7% dividend, likely growing, and that is something you have to implement in your portfolio. The thing with these probabilities are that if this happens, then it happens, and you have to also assume that risk in your portfolio and compare to other opportunities that you have. This is how you invest in a cyclical like Ford. So, will it go bankrupt? Highly unlikely, but there is a 5 to 10% chance. Therefore, it's impossible to know whether stock is a buy now or not. You have to implement the situation in your portfolio. There have been dividend cuts in history with Ford. The stock then booms on dividend increases, and that is normal. So the probability for no cuts in the next 10 years is 65%, but there are also probabilities, according to AI, on dividend cuts. So the key question to ask is, this is a cyclical, and how does that cyclical fit my portfolio? If I would put it on my value investment quadrant, there is always this risk of a recession making it look even uglier. So I have put it here, 6-7% dividends, here a good return likely from Ford, all else equal, but increased risk because of the cyclicality. And that's why I'm not going to put this onto this quadrant, not going to follow. I prefer other cyclicals that are, let's say, in a different business, less competitive with positive long-term trends. But you have to see how this fits your portfolio. That is my contribution. Cyclical, highly competitive, you have to understand the risk and reward and then implement it in your portfolio. It's not a stock. I like following automotive industry, but I wanted to make this video to just discuss, recheck at what level it might fit me compared to other opportunities. And fortunately for now, I have better, as you have seen. Check my research platform for even better, and I'll see you in the next video.